We trade some big movers of the day. First up, Broadcom higher after topping second quarter estimates. The chipmaker CEO noting that AI initiatives are going to account for more than a quarter of the company's total revenue in 2024. Shares coming off their best month ever, jumping nearly 29% in May and have nearly doubled from their 52-week low. That was back in October. Here with our trades today, Shelby McFaddin. She is senior investment analyst at Motley Fool Asset Management. Shelby, what do you think of Broadcom here at its current price?
Yeah, when I see Broadcom, I'm seeing a buy. And the reason for that is going to be that they are more or less a sort of utility company when we think about how useful these services are and the broad range of services that they deliver in our day and age. And when you think about the fact that they are now being given this sort of supercharged opportunity to go ahead and get on a growth ramp after largely delivering mostly on income and being more of a value trade, I think that's a huge opportunity for the company. Now, we still have a long ways to go and to get more clarity on what the road for AI looks like. But if we're looking at a company that already has a lot of scale, that has been operating for a while, has gone through a lot of different environments and has been agile throughout, and they're giving an opportunity to sort of, ramp back up again, I think that's what makes Broadcom a bit attractive today.
All right, is Lululemon. They were surging, Shelby, on blowout earnings. Those sales were up 24% year on year. Revenue from China was up almost 80% from last year, having its best week since March. Would you be a buyer?
For Lululemon, I'm going to be a hold. And that's because when we're looking at these trends, especially those that are really making the stock lively and making the results lively, I need to see a couple more quarters of that going ahead and continuing. So when I'm thinking about the reacceleration in China, I'm knowing that over a couple more quarters, we will have cold and flu season. And I'm also knowing that over a couple more quarters, I want to make sure that that economic growth coming out of China is not, declining too severely. Lululemon does benefit from being a sort of affordable luxury brand. And so we know that there's more of that sort of resiliency coming out of North America as well. But I'd need to see that there really is a sort of fundamental resilience there and that it's not necessarily just a macro wave. So not completely negative, but want to make sure that it's going to hold on that excellent performance.
All right, let's talk AT&T, which is lower after reports that Amazon may start offering wireless service to Prime members. Company AT&T down 17% in 2023, on pace for its fourth straight year of losses. Shelby, what do you think?
Yeah, AT&T is also going to be a hold, and you're absolutely right. It has been a tough 52 weeks for AT&T. We know that they went ahead and started with a lot of that sort of strategic overhaul and restructuring after they sort of lobbed off those media divisions, wanted to start paying down that debt. AT&T has been punished week over week, and I think in this case, they may be being overpunished once again. AT&T really does deliver on income. This morning, they're sitting at over 7% dividend yield. It really is a utility type, almost commodity-like service, and they're mature in their space, and they have a prowess in their space. So they do deliver on their best product. And then not to mention the fact that should this partnership continue, there's not a guarantee that Amazon and Dish will not face any sort of side looks from the regulators or any other barriers to successfully entering the space. So I think AT&T may be unduly punished here, and that's why it's going to continue to be a hold for me on income generation and maturity.
All right, let's hold it right there. Shelby McFaddin, thank you very much. We appreciate it.